You're watching All About Stocks on ET Now. Thank you so much for staying with us. Hemang Jani is with us as well in our studio. It's time to move on to his growth pick of the week. We're talking about Gateway Distriparks. Take a look.
Incorporated in 1994, Gateway Distriparks, or GDL, is an integrated logistics provider and operates 4 container freight stations at India's major ports. In 2007, GDL also entered the railways freight business after the government opened up the space to private players. The company has seen a steady growth in earnings, with the third quarter of FY12 seeing a 24% rise in sales and an 18% jump in profits. This was largely helped by GDL's cold storage vertical, Snowman, which grew 34% for the quarter. And with the budget awarding infrastructure status to cold storage businesses, the company will be able to raise debt at cheaper rates, which will help its margins going forward. The company's stock has gone up by 25% in the last year, and most market men have a buy call on the counter.
Alright, that was GDL. The rail budget saw some sort of encouragement for this stock going forward. We've also seen the growth and the numbers being very good over the last couple of years. What are your expectations from the stock, and why does it make the cut to be on your list?
I believe it's a very strong integrated logistic company with a very strong presence in the container freight station business, which is generating a good amount of cash, and through that cash they are able to invest in other businesses like railway corridors and cold storage chain, which is going to make it a very strong integrated play. And you mentioned that in the budget there was something in it, and 5,000 crore rupees have been allocated for the warehousing sector, and cold storage has been given infrastructure status. So these are some of the good positives for the company.
So when an industry is given infrastructure status, it means that they'll be able to raise money better, they'll be able to access infrastructure bonds. Is that what it means?
Yeah, it means that company will be able to raise money at a competitive rate through some of these infrastructure financing companies, and they also get some tax benefits.
Okay. And going forward, for an investor who gets in at this point on the stock, what are your expectations, and what should be our holding period ideally?
We believe that due to the overall growth visibility across the businesses and the fact that it is available at a very reasonable valuations, we are looking at a price target of about 180 immediately in the next about 6 to 12 months time. But overall, over the next 3 to 4 year kind of time frame, it can again give a 25 to 30% kind of a CAGR return.
Alright, so 25 to 30% CAGR return. But this is again a smaller nascent industry. So from my larger portfolio, how much of an allocation should a stock like this have?
It would depend upon the investor's profile and how much he is willing to put in a growth stock. It could be anywhere from about 3% to about 7%. Overall, we believe that because of the GST introduction over the next 1 or 2 years, whenever it happens, for logistics companies, it might be a game changer. So there could be a re-rating for some of these companies, which may take a while, but for a long-term investor, it would make a lot of sense.
Alright, so that's the stock we're talking about, GDL right now. That's the second recommendation that Hemang brought us on this show. Let's move on very quickly. I have time for one quick question. Himanshu has written in. He wants to know what would be the right price to buy into L&T for a long-term investor. What would be your recommendation for him?
I believe that even at this price, L&T looks quite attractive. It's available at about 13.5, 14 times forward PE. And it has got a very stable, order book coming from oil and gas and few other sectors. So I believe that this is a good price. But yes, because of the volatility in the global markets, in our markets, if the stock corrects by another probably 8 to 10%, currently it's about 1300. So I think about 1200 should be a very good attractive entry point.
So if 1200 is a good attractive entry point, what should be the target on that stock right now, and what should be the holding period for L&T?
Our immediate target price is about 1800 over the next 12 months time. And as the company is into a growth phase, over a period of time, it could give you an upside of about 20 to 24% CAGR.
Alright, so that was the call on L&T. Himanshu, we hope that helps. We hope you jotted that down. If you have questions on your equity investment, there's an email ID at the bottom of your screen. feel free to get in touch with us. This episode will also be uploaded on our Facebook page, where you can watch it one more time if you need to. Keep sending in your stock portfolios. Thanks for watching.